The Trump tariffs have caused the worst market crash since the pandemic in March 2020 and one of the worst market crashes in the S&P 500's history. The S&P 500 was down 10% in 48 hours at the end of last week. Trillions of dollars wiped off the stock market, billions of dollars wiped out from the crypto market. Trump is the ultimate market maker right now in the world. One tweet can send things up or down in a dramatic fashion. But could there be a method to all this madness? Because believe it or not, this might not be the chaos for chaos' sake. Trump is crashing the market on purpose and not out of incompetence, as many people will try to tell you, but out of strategy. So we're going to break down the dark truth about why Trump is deliberately crashing the global markets right now and what his end game could really be. Now, do you remember that tiny little problem called the U.S. national debt? Well, it's not so tiny. It's a $36 trillion and growing problem. The United States Treasury has to either pay off or refinance close to $10 trillion of that debt this year. 10 trillion with a T. Here's the problem. The United States doesn't have $10 trillion of cash just sitting around to just hand it out to people, so it needs to roll the debt over. And here's where it gets very tricky with interest rates still over 4%. That's like refinancing your mortgage at a loan shark's rate. That's a lot of money, $400 billion a year on $10 trillion. That's a lot of money, ma'am. This would be like budget suicide for the U.S. government. They need to do something. So Trump needs bond yields down immediately to force the Fed into lowering interest rates. Jerome Powell, so far, not budging. He should be. The Fed's late. Now, even if that means throwing financial markets under the bus in the short term, that's what the administration's willing to do. Because every drop in interest rates will save billions of dollars in interest payments that the United States really can't afford to pay. So far, Trump's plan has been pretty much working. Fear, uncertainty, and doubt all at crisis level, with recession odds for the year up from 40% to 60% according to JP Morgan. On the tariff bombshell, the 10-year U.S. Treasury yield fell from 4.3% on March 27th to 3.8% just the other day. That's a massive downward move. Now, it's bounced up a bit since then, back over 4%, but still downward trajectory overall. And that's exactly what Trump wants to see. In fact, here's what he said shortly after the markets tanked. He said, "I think we're going very well. We have been in an operation." So read between the lines. This was intentional. They know exactly what the repercussions were going to be for what they're doing. A coordinated play to break the economy just enough to force the Federal Reserve to slash rates. But the question is, can Trump finish the job? Maybe not, because there's still one man standing in the way. That is the king of the universe, Jerome Powell, the Federal Reserve Chairman. Powell is not playing ball, not yet anyway. Powell is worried that cutting rates too early will reignite inflation, especially with tariff fears out there. If he reignites inflation, he ends up looking like a total clown. He can't give in to political pressure, so he's holding firm for now. So how much further have financial markets got to fall to bring the yield down to a sustainable level? Well, too much pressure on financial markets and bond yields will go up instead, as we've kind of seen over the last few days. And that's the unfortunate reality, right? The 10-year back over 4% is not what they want. They want it under 4%. They want it to go down, but there's been too much stress on financial markets, and that's what's resulting in this. Okay, it's not a good sign. So what's Trump really after here? Well, before we break that down, look, if you guys are trading the cryptocurrency markets, I know a lot of you are. Okay, you want to long Bitcoin when it pumps, you want to short Solana or dog coins when they dump. You need a good place to do that at. Check out BitUnix, one of the hottest exchanges in crypto right now, deep liquidity for all of their major pairs, and no KYC, no VPN, meaning that anybody, anywhere, doesn't matter what country you live in, you can use BitUnix. Okay, so you want to go check this out. There's a link down below. You're gonna get some pretty sweet deals. You get $10 for free just on starting your account. That's just free money to do your first trade, to try out the exchange, see if you like it or not. You'll get a 20% deposit bonus. You deposit $1,000, get $200 back. $2,000, you get $400 back, and you get up to $500 in trading bonuses. Link down below. Go check it out. Here's the thing: the whole conversation, it's more than just about being trying to get the interest rates down. This is about driving economic growth in a way that puts Trump's legacy in the history books, both politically and economically. Right now, he seems to be making a total mess out of it, but he's always said short-term pain, long-term gain. We just didn't take him seriously enough when he said it, because politicians are always full of shit. They usually don't do this kind of stuff, but he's doing it. He's doing it. He's willing to take the pain in the short term. This is exactly what Trump wants. Unfreeze the housing market, man. Nobody's buying homes with mortgage rates over 6%. You need it to come back down. down. Lower rates bring life back into real estate to help boost GDP, to stimulate business growth, create the wealth effect. High borrowing costs kill small businesses. Drop rates and suddenly entrepreneurship's back on the menu, baby. Investment comes in from overseas. It changes everything. Powell's got to lower rates. Trump wants to reignite the economy before the 2026 midterm elections, but he can't do it with interest rates this high because the economy is frozen. A market rebound would make him look, of course, like a savior as well, because right now he can blame it all on Biden to some extent. It's Biden's economy, I'm fixing it, okay? Even though he's the one who lit the place on fire using a match and blew everything up. Biden built a powder keg. But not so fast. The USA just can't rebuild its entire supply chain in a matter of a few months. This is a very complicated issue. So how does Trump soften the blow of prices going up? In theory, if you slap tariffs on imports, then you can cut domestic taxes. Tariffs generate revenue from foreign imports, which can then be used to justify major tax cuts at home. And it's a big gamble. But these tax cuts will unlock all of the above: housing, business growth, economic stimulus, big stuff. If the plan works, the bull market comes back with a roaring ferocity. Asset price will moon to levels you can't even imagine. We'll all be super rich again. But none of this happens if rates stay this high. So he has to play hardball. If he wants to do the things he wants to do, he has to go to bat. He has to tank markets. He has to force the Fed into lowering those damn interest rates. We already know the Fed is getting ready to lower quantitative tightening. So Trump is trying to get the economy back to potentially even stimulus as quickly as possible. That means QE, that means money printing. Not a guarantee we get that, but at least we mean NQT and lower the damn interest rates. No matter how much short-term pain all this causes, Trump's willing to take it. But the risk is massive. If domestic production is slow to take off, then inflation explodes. If the Fed hikes instead of cutting rates, which is a real possibility, a lot of people are worried about that right now, then cheap refinancing collapses and the whole plan goes up in smoke. And if neither works, then welcome to stagflation, a dark, dark place where nobody wants to be. And here's the darkest part of it. Oh, I thought I was dark. Oh, we're getting it darker. This might not just be about America. What if this isn't just a domestic game of interest rates and tax cuts? What if this is a preemptive strike to stop a global financial crisis, even though it appears like he's starting one? Trump's tariffs aren't just economic, they're geopolitical. This is a complete reordering of the global trade and financial system. For decades, the U.S. tolerated offshore manufacturing, currency manipulation for foreign powers. That game's over now. Trump's tariffs say this to the rest of the world: fix your currency, fix your trade balance, or get wrecked. The tariff rollout wasn't just about trade. It was a controlled demolition in order to scare Wall Street into deleveraging before the bomb went off. And so far, it seems to be working. Hedge funds have trimmed risk. Leverage is leaving the system. U.S. companies right now are coming back down to cheaper valuations. Now, if anything in the world breaks, it's a bruise to the U.S. market and not a body bag, okay? For other countries, this is a body bag scenario and they have to come negotiate. Because Bessent, Treasury Secretary, he's been saying it over and over and over again. China is in deep trouble with a recession or even a depression likely on the cards right now in China. They've been dumping trillions in trying to stimulate their economy, and it's been working, but they're fragile. So Trump could be playing the tariff card right now to box China in when they're vulnerable. This is like, you want to talk about 4D chess? They're really going after complete economic collapse of effing China, guys. If the Chinese yuan collapses, the world panics. Where does global capital flee when it panics? U.S. Treasury bonds. That means lower yields, lower interest rates. Just in time for the U.S. to refinance almost $10 trillion in expiring debt, and they take out two birds with one stone, their debt problem and their China problem. It's foreign policy through supply chain warfare. Weak foreign countries have kept labor cheap overseas, taking out U.S. industry, and have fed a fake version of prosperity in emerging markets. The United States, according to Trump, is done subsidizing all that bullshit. And this is exactly why, you know we're going to talk about Bitcoin, aren't you? This is exactly why Bitcoin matters. See, fiat currencies have been manipulated for decades. Central banks just print disgusting amounts of money, and there's all kinds of bullshit going on in the background. They've hit the wall, okay? The sovereign debt crisis is here. You can't keep running these kind of debt to GDP ratios forever. Most countries can't afford it. Maybe the US can afford it for a bit longer, but Trump doesn't want to afford it. He understands that that's a dead end that will lead to complete chaos, and that will cause a Great Depression. Now, whether Trump wins or loses this round, whether this all pays off, whether this high-stakes game of chicken with the entire effing global economy plays off from or not. The system can only continue as it is by printing more money. And money printing is rocket fuel for crypto. And when the only way out of printing is, well, printing more money. It's really the only... What's your solution to money printing? Print more money. The winner isn't going to be just stocks. It's going to be Bitcoin. The big print is probably coming in a way that's going to be shocking to the world once again. You just need to be patient while the game plays out. It's going to get ugly, potentially, before it gets better, but it will get better. Okay, markets never stay down forever. Okay, none of this is going away. Bitcoin's not going away and going to zero. Stocks are not going away and going to zero. The housing market's not going to zero. Eat shit for a while. That's what we got to do, guys. It's not fantastic, but it's what we got to do. Thanks for watching.